everyone. A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be working with the awesome oscillator along with the acceleration deceleration oscillator. And this is a separate series. Till yesterday, we worked with the awesome oscillator, and that was a different setup in which we utilized the average true range ATR along with the min max. And here, starting from today, we are going to develop a fresh new approach and try to see if we can be profitable with a different setup. And I hope you are well familiar with the awesome oscillator's technicalities and his acceleration deceleration oscillator. And the simple difference is that there is less lag in the AC2 compared to the awesome oscillator's change in direction, and more or less the both are directional indicators where we get a good idea of which way the trend is headed, but the acceleration deceleration oscillator changes the direction much earlier compared to the awesome oscillator. But it depends on the combination with which we will work, and there is no inherent advantage or disadvantage in the approach. So both these indicators are useful, and we have to try to develop a combination which will serve our purpose. Before we go into the detail, there is a standard disclaimer where I would like to remind that this is simply a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And suppose if you want to use any of the algorithms for your own purpose for the live account, I would recommend that you do extensive trial runs for many months and maybe even years, and also allow it to run on the demo account for good enough time. And of course, nothing in the webinar is to be constructed as an advice for a trade or for any particular setup. With that, we start the day. So here I will first of all I will explain you the workings of the setup. So the basic premise has been kept the same. We will simply be trying to go for a buy trade on the 4 hourly chart when the positive values are rising. So suppose here the positive values are falling, so we won't be looking for any trade. We are not going to look for any sell trade. The sell trade is going to happen when the negative values are falling. So that is the underlying premise. So it was the same for yesterday's algorithm as well, but what we have changed is that now we are bringing in the acceleration deceleration on 1 hourly chart. So this oscillator, awesome oscillator, is going to remain on the 4 hourly chart, whereas we are going to use the AC2. This is a different indicator, and AC2 is going to be used on the hourly time frame. So here I will zoom in a bit to give you a better idea. So see here the awesome oscillators negative values are falling, and it keeps falling till the 1 GMT of 20th March. And here on couple of occasions here you can see that fresh trend happens on the hourly chart. So what we are trying to do basically is that we will be looking for retracement, and then even if there is some move in the positive direction, so we will wait out for that, and only when the fresh trend will start. So here after the value staying in positive territory, again the trend turns bearish. So on such occasions only we will be looking for the sell trade in the first hour of this change in the momentum. So we will put in the conditions using shift 1 and shift 2, that is the last candle and the candle prior to that, using the visual forex platform. And only during this first hour of this momentum change we will be going for fresh trades here. So let me explain to you on 4 GMT 19th of March the trend change is visible. This value on 3 GMT the value is positive, then it turns negative. So as soon as this candle closes, immediately during the start of this 5 GMT candle, a fresh order will be placed, and here we can go for a market open or we can go for a pending open. Both ways it should work. and immediately after this closure of candle the new order will be placed, and only during this 1 hour the trading conditions will be open, and provided the other conditions are fulfilled the algorithm will execute the trade. So here let me go on the 5 GMT. So this is where the sale will happen, and then it makes the move starting from there, but it is of course volatile. I think the closer happens somewhere close to 1.08965, and at some point in time the value goes as high as 1.095, so 50-60 pips move on the higher side. But in recent days the volatility has been a lot high, so we will need to factor in that also. Maybe in a later part we will bring in the ATR back again, but the basic premise is that we are trying to go for the trade only during the first few hours, only during the first 1 hour of the trend change. So again here the trend turns from bullish to bearish, and we can again freshly look for a trade, and from here also the values fall pretty much more than 100 pips, but these are not ordinary times. In normal times the momentum is not this strong, and the volatility is a lot less. So here similar kind of example I would like to show you on the buy side as well. So as you can notice, the awesome oscillator's positive values are rising, but our algorithm will trade only when the momentum turns from bearish to bullish on the hourly chart. These are on the 4 hourly, and then these graphs are on the hourly. AC2 is on hourly setup. So only during this change, after this 9 GMT candle closes, the algorithm will place for a buy trade. So let me see. 9 GMT, what time it is? It is 9 GMT, so we will need to somewhere here the buy trade will happen, and then it goes up to the decent extent. Again next time the buy trade will happen somewhere around 22 or 23 GMT, and that is somewhere here, and again the uptrend will continue. But then I think here also one more time the trade will happen 19 GMT, and 19 GMT is somewhere here, and this time around most probably our trade will end up in loss. But after that what happens, the algorithm will stop trading as the positive values start falling. We won't be going into the sell trade just yet, and only after the awesome oscillators values on the 4 hourly chart have turned negative, the indicator, the algorithm will start trading again. So somewhere here on 8 GMT of 12th March, the sell trade will be placed, and even from those levels, the Euro USD falls to levels more than 100 pips lower than the order open price. So this is the basic premise for us to work with, and of course to make sure that in times of undue volatility our algorithm shouldn't be executing too many trades, given that we are providing it with a 1 hour window for trade execution. But we will bring in additional factors to make sure that it only places a few orders, not for 1 hour each with each tick or with each candle. It shouldn't do that. So let's get to the work on the visual J4X platform. So this is AC2 indicator. First we will need to do the instrument subscription, and we will work with on candle method, as we have 1 hour's time window, so we don't need to utilize the on tick. We can utilize the on tick, but I think on candle is also fine. We will need the awesome oscillators 2 blocks to look for the 4 hourly requirements, shift 1 and shift 2. Then we will need the AC2's values to AC2 blocks as well to make sure that the trend change is spotted by the algorithm. Now we bring in the if conditions. Trading logical, and here we will do the instrument subscription first. We need two blocks for instrument subscription and one more for position amount. We will make sure that fresh trades are opened only when there are no pending or the current position open on our account. So let us do the instrument subscription. Default variable, default instrument, and then we choose on candle instrument. And the candle instrument should be equal to the Euro USD. Finding the instrument, here is the TDS job. Okay, we got it. So here is our instrument subscription. Just to make sure that we are doing it right, we will need to do the test run later on. And now let us bring in the position amount. Position info, all position amount. No pending or the open position should be on the account. So we make sure it is defined at 0. So this is done. Now we connect the AC2 blocks. And one more thing is we will need the historical candles as well, hourly candle, as we want the order to be placed only when there is optimum condition, there are optimum conditions. So we want component mathematical info get historical candle. So we will utilize the hourly candle. Now let us do the changes. We have kept the default instrument Euro USD. You can make changes to that. If you want to work with another instrument, you can do that anytime. Now 4 hours, let's change this. shift 1, last candle closed. Again shift 2, the candle prior to the last candle, penultimate candle. These are default setups, we let it remain as it is. Then these are output values. While looking for a buy trade, the algorithm will be keeping focus on the positive values. For sell trade, the negative values will be in focus. And these are defined on the bid side, closing price. Now coming to the acceleration, deceleration, here we defined it at hourly time frame. And again shift 1 and shift 2. Shift 1 and shift 2. And now coming to the historical candle, we have to define it at shift 1, last candle close, and the default candle period is going to be of 1 hour, so it will be hourly. All right, so we are almost done. Now we will need to bring in the multiple action trading blocks. So far the setup is simple, and we are going to bring in the multiple action. But soon in today's session we will work with the pending open. So before we start developing the buy and the sell side, while developing the buy and the sell side, we will need to bring in the calculation expressions to define the order validity time, and of course the buying and the selling price as well. So now we will do it simultaneously. So I will leave the space here, and with that we start developing the buy and the sell side, and we will add the blocks as per the requirement here. Sorry, pardon me. And let us go back on chart now. What we need to make sure that, so let us see when our conditions will be fulfilled. So after 5 GMT 12th March, anytime when the momentum turns from bullish to bearish, the algorithm can execute the sell trade till 1 GMT of 16th March. So let us check for the conditions and what will be the optimum entry point, and we will define that using so suppose if the 4 hours conditions are fulfilled, let us assume, then the sell trade would have happened somewhere here, and that is 9 GMT of 18th March. 9 GMT is here, and now what we will need to do is that we need to bring in the requirement that there shouldn't be any undue volatility. So what we do, we cap the current tick price at the highest value of the last hourly candle close. So suppose if the current hours last tick price exceeds the high price of the last candle close, then the algorithm will stop trading. It won't be placing new orders, and since the order validity is only 1 hour, so suppose if for any other reason if the price shoots up, the algorithm will simply stop placing the orders, and then that will save us some trouble. And for providing some buffer, as there is always some volatility, we want to make sure after the candle has closed, whatever be the last stick price, we will adding some pips or some maybe ATR range, 5%, 10%, 20%, whatever you feel like, you can add it, and we will place the limit order. So we will be placing the limit up. So suppose the price is lower, then we will be placing the order on the higher side. As and when the price will go to that level, the order will be placed, and the trade, suppose if after the order is placed, the trade is if the requirements are fulfilled, if the price goes to that level, then the order will be executed later on. So that is going to be our setup. And for that we will of course need to bring in the calculations as well. So let us now start building the buy side first, then the sell side. And with that, whenever we need the calculation expression, we will utilize that as well. First of all, let's start with the if conditionals. Let us take 2-3 blocks. We are going to need it anyway. The first requirement for the buy trade is that the last candle's awesome oscillator value, positive value, should be higher than the prior candle's value. So we check for these conditions, and we want the value to be higher. So that is the basic requirement. Now coming to the hourly acceleration deceleration oscillator, again here we want the positive value of shift 1 to be higher so this is the positive value, and it should be higher than 0. We have to state it explicitly. And then because what happens, there will be in acceleration deceleration, the output will be either positive or the negative. When the output is positive, there is no negative output. At in such time, there is no negative value which will be less than 0. And similarly, when the indicator is in positive territory, it will be showing the positive value. Of course, it will be above 0, and that is why we have to compare it to the 0, and we have to state it explicitly. Of course, any positive value will be greater, but then the algorithm should also know that, and the positive value, suppose it needs to be greater than the 0. And now other requirement is that the negative value of the candle prior to the last candle, shift 2, should be less than 0. What it will mean? It will mean that it was in bearish territory till the momentum shifted in last hour. So only during the first hour of the momentum change, the algorithm is supposed to execute the trade. So that is the basic requirement for us to work with. So we want it to be less than the 0. Now let us put these if conditions back where they belong, and we then look for other requirements to optimize the setup. So here and now we want the last tick price to be less than the candle 21's high price. So let us see the candle 21's high price and the last tick price. Okay, on candle, on tick, the last tick, and it is on the bid side, so we check for the bid value. Last tick bid should be less than the candle 21's high. So we go for the auto created variables and the candle 21 is here, and we search for the candle high last tick, and it should be less than the candle high. Okay, we bring in other if conditions. So the last tick bid is supposed to be less than the candle high of the hourly candle, but I think now we are here so far looking good, but then now we will need to define the entry and the exit points. For that we are going to need the calculation expressions, and for that let us bring in the calculation expressions. Components, mathematical, we are going to need three calculation expressions, one for defining the buy execution, and one for the sell execution, and one more for the order validity, so that we can place the necessary. So here we connect these blocks. As of now we are not going to need this if conditions, so we put this somewhere here. We want our algorithm to look aesthetically well as well, so let us put the calculation expression block first one this side. Okay, so here and now we arrange this. So for the day we will stop with the setup so far. Tomorrow we will do the calculations, and then we will add the sell side. So this is a simple setup, and most probably we will be able to complete it. Suppose if we need further optimization, if the test results warrant that we need to do the further optimization, then we are open to it. We will do it as well. So let's save the file. I would like to thank you all for joining in. We will be back tomorrow for the second half of this session. So bear with me for one more day. Thank you all. See you tomorrow. Goodbye.